Hello friends, thanks for joining me again. I'm just doing a follow-up video, a fairly quick one, on the first question I asked a week ago. I had a few questions in the comments about the chart. I just thought I'd go through and clarify. Now the first question was regarding this little period here. You can see that supply was drawn out on this up-thrusty sort of bar, but there was no downside follow-through in response, and the market went into a sort of consolidation and absorption mode as it pushed lower in response, and then it went through a testing period here. And you can see that after a little while down here, that volumes became very low at that point, and that's representing a lack of supply in the market. So although there was supply drawn out on this bar, pretty much no doubt with the high volume, after a period of testing and absorption, the market was relatively satisfied that the supply had been removed or withdrawn from the market. Now, if you draw a line across the top of those low volume highs, then this bar is sort of like a breakout, especially if you look that that bar is actually the highest close on the chart at that point in time. Whenever price breaks out to a new level, it'll draw out supply. And that's why you normally see a breakout having increased volume over the previous bars. It doesn't have to be excessive. In fact, you don't want it to be excessive, but a good breakout bar will have increased spread and increased volume over the previous few bars. And that's what this bar has. It's sort of like a mini breakout. It's not a really serious, strong breakout or a massive breakout. This one back over here, I'm just looking at the chart, is perhaps a little stronger. The testing came back more deeply than I would like. I like to see testing come back no further than halfway, 2/3 at the most. This period here, which is the period in question, was absorption and consolidation in response to the push above these previous highs and the push up to the highest close on the chart at the time. And yes, supply was being drawn out, but the relatively narrow spreads of these bars and mid-bar close suggest that the market was making a pretty strong attempt at absorbing that supply. And then the last bar of the three, if you look down here, has quite low volume. That allowed price then to push up for a second time. It's only marginally higher than the previous bar. And then the two bars in response to that don't draw out any serious supply at all. That's these two here. Now following that, as you know from the original video, price made a strong attempt to break out and then supply was drawn out. And the market continued to try and move higher on low volume, but it was forced to come back and shake out. The next question was about this shakeout bar. It's a shakeout over 4 bars, and it forms a bullish reversal because the close of the 4th bar was above the high of the initial down bar, and that's really important. But the question was about this bar. Can you consider this bar strong enough to justify the very high volume drawn out during the testing phase on that bar? Now, volume was really, really high on this bar here. Easily the highest on the chart so far, and the spread narrowed considerably. generally spread and volume go hand in hand. A wide spread, high volume. A narrow spread, below average volume. And this bar has a average to narrow spread on really, really high volume. And the next bar was up, and it closed at the highs of the bar. Everything points to the fact that there was substantial buying on this bar. If, for instance, this volume was all selling, you would expect the spread of the bar to be very, very wide and have had a low close as price stretched down to find enough buyers to satisfy the sellers. But that wasn't the case. The spread on the bar remained very narrow and the next bar was up. And then the following bar after that, if you were still waiting to decide, pushed up strongly in a buy the offer sort of fashion, where whatever supply was sitting above the closing price on this bar in the offer was bought up completely, with the close up high on the bar and above the high of the initial down bar, forming a bullish reversal. Yes, for me, that was a very strong bar. It indicated very strong buying in the market. And some people would buy that bar. They would see at the close of trade that what had happened and would buy that bar. For me, I'm a little more conservative and I would have waited to see the response. I perhaps would have bought this bar or the testing through here when the testing was done really high on this widespread up bar, the fourth bar of the shakeout and the completion of the bullish reversal. That was the ideal time to buy for me. It was very safe. The chances price was going to accelerate away was high, and I know a lot of people would buy that bar because that's the bar after the testing that moved above the highs of the last bar in the shakeout or the bullish reversal. So that was when price was saying it was going to move on. Now you would have had to survive this bar, which is the bar in question. Was this bar strong enough to tell you that the supply drawn out on this bar wouldn't suggest that market would go lower? Now you always look for the response when you're doing this type of analysis, and the response was an up bar on low volume. That suggested that on this bar in question, whatever supply was drawn out had been absorbed. There was no ongoing selling in the market. And the following bar was also up with a good spread on even lower volume. There was very little selling pressure in the market. So whatever supply was drawn out on this bar, on this down bar in question, was either withdrawn or absorbed by the market, and it wasn't there any longer. And price then just continued higher after that. There was a little bit of supply on this bar, but it was tested the following day, and price then, after an absorption bar, pushed higher again. So for me, there was really, really strong buying on this bar, and the response to this bar suggests that the market was comfortable. It was almost looking a bit impatient the way it moved, but the response to this bar being up on low volume suggested that selling pressure was low. If that was up on really narrow spread and low volume, you would have to question it and wait for the next bar. The next bar was up anyway. But if you had a very narrow spread up bar in response on low volume, that would suggest that demand was very low in the market. But the average or slightly above average spread of this up bar in response does suggest that there was enough buyers in the market and it was supply that was low. in response. It's very subtle, and you still want to see the response to that bar to make sure that you are reading it correctly, but the response then was this bar here, which was also up, well up, good spread on even lower volume. And all that together continues to suggest that supply was low in the market. Okay, hopefully that was helpful. Thanks for your time. See ya.